Welcome, traders, to another Tick Mill trading update with me, Patrick Munley. Want to take a look at the S&P 500 using the emini futures contract and put together a trade plan for the session ahead, which is going to encompass pretty material macro data, which obviously comes in the form of the inflation print, the CPI. Posted on the Titmill blog here, the Goldman Sachs view on that release. They're looking for a marginal increase on the August core CPI, 0.23% versus a 0.2% consensus, and 3.17% year over year versus 3.2% consensus. The important aspect that I like to take a look at here is the view from the Goldman Trade Desk with respect to the anticipated market reaction. Notice implied volatility at the moment is 1.05% on the session, which roughly correlates with a 55-point move in either direction. The Goldman view, if it comes in line with that, they're anticipating plus or minus 0.5% move on the session. Now, note if it comes in hotter here, you can see that a decline is anticipated, and that varies from a scale of 0.75% to the downside to a 2.25% extreme reaction on a very hot print in the core month over month. Likewise, on the upside, if we get a downside surprise, then we're anticipating that the market will have an overshoot to the upside of plus 1.2%. So keep those levels in mind as we head into the print today, and certainly I'd highlight those on your charts. So moving to the technical setup, the weekly will remain in the weekly volume weighted average price being bearish at the moment. And if we look here, we can see that it's going to take a close now back through 55.61 on the week to flip that bullish. Note the psych indicator is still, from a momentum perspective, just hovering above the zero line, which suggests we do still have some bullishness in play here. Moving to the daily time frame, as referenced yesterday, we have our expected range for the week with the upside objective coming in at the 55.40s, which is in the 50 to 61.8% retracement zone of last week's decline. On the downside, we have a projected potential downside objective 52.70s. So keep those levels in mind. And I'm going to highlight this on the 4-hour time frame, but there are certainly some similarities in terms of the price action we're seeing at the moment with that July-August drop that we saw. So let's move to the 4-hour time frame. If we blow this up on the 4-hour chart, any disappointment today that leads to a pullback in markets, there are two key areas I want to pay attention to: 54.20 and then the prior lows. As you see through the last corrective phase in the July-August swoon, we did retest the lows before extending to the upside. So today, if we do get a print on the CPI that spooks markets, watch this 5400 area on a retest, 5390s, bullish reversal patterns there. I'd take a look on the long side and look for a test up into the 5440s, 5450s if we find buyers into a retest of the lows. If we get negative market reaction to the print and take out the lows, then the next area of interest can be 53.70, 53.60 on the downside. So moving to the intraday setup versus the swing low that we have in place at the 54.48 level. That now gives us an upside quality objective into those 55.50s we know the 5540s are the weekly projected range resistance. So certainly I'm going to be watching any move into this area to add to short positions. Watch for bearish reversal patterns there to engage on the short side. That's going to be the premium entry, I think, to add to short exposure here. And then I'm looking for price to break through the corrective trend channel support, which at that stage will be coming in roughly around the 54.80s. So look for a breakthrough there. 54.20s will be the target on the downside. Might see a little bounce there before retesting those prior lows. So that's going to be my key area to engage on the short side. From a range perspective, 55.80s would be the two standard deviation move. And again, if we get into that area, I would play that for a counter trend move. Any move up into that 55.80s would certainly be a bullish development. And we could then be talking about a low in place on this leg to the downside. So those are key levels on the upside where I'm going to be looking to be active. If we take out the support, like I say, the 54.20 is going to be the first area of interest, and then the 5400s down to 53.90s would be areas I'd be looking to engage on the long side. In terms of my own book, you can see my positions here. Those are now all sitting risk free, and I'm looking as per my analysis on the higher time frames. I am looking to add to short positions for another leg to the downside ultimately, but I remain flexible, like I say in my analysis. Stay nimble. Don't get married to any idea at this stage. But for me, at the moment, I am expecting further volatility as we head into these elections, and further opportunities on both the long and the short side, with a bias overall for downside. Like I said yesterday, as we hold this 56.70s, I'm looking for the something close to 5,000 on the downside before we see the potential, I think, to base for another leg to the upside. And ideally, we'd be looking at that move developing into or just prior to the elections is the game plan from my perspective. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.